Hey everyone, Couch Investor back to another earnings video for today. So let's talk about Shopify. There is a lot to talk about. 20% reduction in the workforce, and they are selling their logistics business to Flexport. Now remember, they acquired Deliver 1 year ago for $2.1 billion. 1 year later, they are selling it to Flexport for around 13% stock in that company, which if you take the latest valuation of Flexport, that's about $1 billion. So that's one heck of a write-off for Shopify. But Shopify also invested in Flexport way before, but overall, they are taking a hit on their investment in that logistics business. To me, let's be honest, logistics is not for everyone, and this just shows again the strength of Amazon. Shopify tried to do it, saw that probably it's going to take too much time, too much resources as well. They rather focus on what they're good at, and I think that's the good way to go. So they went with Flexport. Flexport will also be the go-to logistics provider for Shopify Promise. Now, Flexport, as you remember, has switched CEO, so the founder Ryan Peterson, which was great, did an amazing job during the pandemic as well, stepped down, and now we have David Clark, which is an ex-Amazon retail CEO. So again, I think it's the correct move. Do share your thoughts down in the comments below. We're going to have a look at that comment in their earnings report. So on May 3rd, 2023, Shopify entered a definitive agreement to sell the majority of their logistics business, including the people, technology, and service related to these operations, to Flexport, a leading tech-driven global logistics platform. Shopify has been building a world-class logistics solution that is port to port, giving merchants speed, flexibility, and affordability, all with a simple, seamless integration into the Shopify tools they already know and rely on every day. This transaction will take the logistics solution Shopify has been building and place it in the hands of a trusted and mission-aligned partner, Flexport. The transition of Shopify logistics assets to Flexport will be led by Harish Abbott, co-founder and CEO of Deliver, under the guidance of Flexport CEO Dave Clark. On the terms of agreement, Shopify will receive stock representing a 13% equity interest in Flexport on top of its existing equity interest. In connection with the closing of the sale, Shopify is entitled to name a director to Flexport's board. Flexport will become the official logistics partner for Shopify and the preferred provider for Shop Promise. This transaction is expected to close in the second quarter of 2023, subject to certain conditions and regulatory approval as applicable. And a quick comment here from Harley, the Shopify president. So Shopify's strong first quarter results demonstrate once again that we're the go-to solution powering business of all sizes on every surface where they sell. The changes we're announcing today will ensure we keep pace with the high velocity of change before us, delivering the cutting-edge solutions our customers have come to expect from Shopify. So again, reducing the workforce by 20%, selling off the logistics business to Flexport, in my opinion, good move, so they focus on what they're good at, streamline the business, and continue to grow faster from here. And that's maybe why the market is probably celebrating right now, because the stock is up around 17% at the time of making this video. Of course, as you know, it might change when the market opens, etc., etc. Now, before we go and look at the numbers further, what do you think about this move? Is it a good one, bad one, or disappointed? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's start off with a couple of business highlights here. So they continue to add big customers such as Keen, 7 for All Mankind, Seiko, which is the Japanese watchmaker, and Herschel Supply. Of course, we talked already about the price increases for the services, the ChatGPT API on the Shop app. So we're familiar with that. They launched Pinterest as an advertising channel for Shopify audiences. Shopify audiences is now driving performance-based advertising on Meta, Google, and Pinterest. I've actually tried out Pinterest advertising on Shopify, got my impressions up by a lot. Call to action, not that much, but I'll try and improve the page. If you don't know, I have a Shopify store selling some merch there if you want to check it out. You don't have to buy anything, just check it out and leave your thoughts down in the comments. Would really appreciate that. Then when it comes to the most important numbers, GMV, gross merchandise volume, increased 15% to $49.6 billion, which also beat consensus of, I think it was $47.3 billion or so. So good to see that, an increase of $6.4 billion year over year and up 18% on a constant currency basis. Total revenue increased 25% to $1.5 billion, or up 27% on a constant currency basis. So, of course, with fears of high inflation and maybe people not spending that much, it's good to see that GMV is up by this much and also beating consensus. I think the market is also appreciating this. Then when it comes to merchant solution revenue, that increased 31% to $1.1 billion. They say here that's driven primarily by the growth of GMV and continued penetration of Shopify payments. There's also subscription revenue, so there's merchant solutions and subscription solution. Merchant is the bigger one, subscription a bit smaller, but that also increased 11% to $382 million, primarily due to more merchants joining the platform as well as higher variable platform fees and apps. If you build a shop on Shopify, you know that you can add various apps. Some of them are free, some of them are paid. And that's obviously how they make some money. I don't know what the take rate here is exactly, but maybe we'll get more information during the call. As always, I'll create a community post and write some highlights there. Then when it comes to gross payment volume, or GPV, grew to $27.5 billion, representing 56% of GMV processed in the quarter versus $22 billion or 51% in the first quarter last year. So a 5% increase here. Very nice. Then looking at gross profit, and of course it has taken a hit. We know why. They'll explain it why here again. So that grew 12% to $717 million. Gross margin for the quarter was 47.5%, but that's down from 53%. This was primarily driven by higher mix of revenue from their lower margin merchant solution segments, primarily from the lower margin revenue contribution from Deliver and Shopify payments. Again, I won't say getting rid of Deliver, but selling it off basically is again the correct move. And as for operating loss, that was $193 million or 13% of revenue, which is obviously an increase from the 8% of revenue, which was $98 million last year. But if we look at free cash flow, that was $86 million or 6% of revenue compared to a negative free cash flow of $41 million or 3% of revenue in the same quarter last year. Again, I expect profitability and free cash flow to increase from here. Now, when it comes to outlook for Q2, basically revenue and gross margin to be similar than the first quarter growth here. Operating expense dollars when excluding one-time items related to the planned sale of the logistic business and severance to decrease by mid-single digit percentage compared to operating expenses in the first quarter of 2023. Stock-based compensation to be approximately $110 million, also excluding the one-time charges. Now, they say here they expect to achieve free cash flow profitability for each quarter of 2023 and capital expenditure of approximately $100 million for the full year. They also estimate that they will incur a severance charge in the range of $140 to $150 million in the second quarter of 2023 related to the workforce reduction. Now, as for the capital expenditure for this quarter, that was $14 million compared to $16 million in the same quarter last year. So all in all, what will happen now with the stock? Obviously a huge gap up here, close to $54, which is again going to be an interesting area if it can stay up there, because we were already there at the end of January. Obviously it didn't stay there for long, went back down to around $40 or so. So let's see if that big gap up can continue and break that, what I would call a small resistance line here, because again, we did fail to stay at this range before. It will be a big gap. Remember, not all gaps do get filled, but most of them will. Now, as for the RSI, I expect this to tick up as well. MACD is still bullish, so no issues with that. It's going to be interesting to see what happens when the market opens. So to conclude, one hell of an earnings report from Shopify, performance-wise, but also all the news with regards to the 20% reduction in workforce. Basically saying, okay, logistics business might not be for us. Let's sell it to Flexport for 13% equity in that business, which is worth around $1 billion, which means that they are taking a hit of around $1 billion or so, or a write-off of $1 billion, because they acquired Deliver for $2.1 billion, giving it away to Flexport, not giving it away, but you know what I mean, 13% equity there, which is worth around $1 billion right now. Of course, if Flexport continues to operate the way they're doing, they will be worth more in the future. And so the equity that Shopify has there, it's not only 13%, by the way, they also invested, I think, round E in Flexport. So that will be worth more and more in the future. But overall, again, I'll say this, I think it's the right move so that Shopify can focus on their core mission, their core competency, let's call it, innovate where they're good at, let the logistics team be a problem for Flexport, which I think they've been doing a tremendous job there throughout the years. Of course, do share your thoughts down in the comments below. If you want, go check out my merch store on Shopify. And as always, if you like this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.